Let's break down sort of what we know so far about the results out of Robinhood.
So late on revenue, for sure, as we said. A little bit surprising because equity volumes were pretty good this quarter. They're up about 10%. Now, we do have some evidence that those volumes were driven a little more by institutions than by retail accounts, which might explain some of why we had this disappointment for Robinhood. The crypto numbers, too, do look a little bit light compared to last quarter. So huge growth year over year, but down from last quarter. Perhaps because they don't have Shiba Inu. That's one coin that they're missing. Everyone's waiting for. But the key part to that now is what happens in the first quarter, and we know it's looking ugly so far this year.
All right, Robinhood, as we said, we're seeing a lot of selling, down about 10% after that fourth quarter revenue misses estimates. So, Julie, this company, we know what they do. We know it so well. They've been such a company, if you will, and product and platform of our times. Is the story, the future growth about moving beyond that and finding different revenues of growth?
Absolutely. They need to start to begin to diversify away from these very volatile trading numbers for retail investors and from crypto. Important core parts of their business, but they're going to want to move forward to find more recurring revenue. And that really begins to come from wealth management, right? Retirement accounts, things that really have kept Schwab in very good stead for years and years. So to find that recurring revenue where they're getting management fees instead of being dependent on trading day in and day out, especially as people go back to work and they're not day trading so much.
And speaking to that, you know, monthly active users, sure, they're increasing to 48%, 17.3 million, but the market wanted to see 19.9 million. So they're not managing to show that growth. And how important is that when we have the regulatory question mark of how they continue to foster this revenue growth with payment for order flow?
Absolutely. I mean, the user growth is absolutely key when they're so dependent on trading volumes. It was a really tough story last quarter. Down again this quarter, it sounds like. Not quite as bad as what it was. So they seem to have stopped the bleeding, but they are still hemorrhaging a bit in terms of users, and they'll really need to turn that around in the face of just growing competition.
Julie, I think it's fair to say that Robinhood changed the game, at least when it came to providing access for retail investors and doing this with no fee. And we saw a lot of the competitors to Robinhood follow with offering free trades. But it raises the question now, what can it do that other platforms can't do? What is its moat? What is its competitive advantage, especially as you see the rise of crypto exchanges, FTX US, increasingly getting into, well, stock trading?
I think there's two things that are really important for them to keep that momentum going, to be on the side of the retail investor, to win those folks over. One is education, and they're putting a lot of money into offering better education, explaining how to trade your first stock, how to get involved in crypto. They're starting to give recommendations, which is potentially a slippery slope from a regulatory standpoint, but they're finding a way to do that in a broad, diversified portfolio kind of way. So that's really key to kind of winning over and holding those retail investors, making it easy to transfer accounts over, which they haven't done yet, adding crypto wallets so customers can do what they want with their crypto, all little things that help on the service side, but money to market and investing in education is really important.